Right, good morning. It is, oh, wrong button already. It is June 24th, and it was a rough day yesterday for a lot of people. So we're going to take a look at things this morning and see, does it get better today? And actually it was not as bad as I think it could have been. There was definitely a lot of red yesterday going into the market. And then a surprising amount of things actually flipped green, ASTS being one of them, but then we finished red. We're on the weekly here. Let's go to the daily. Well, we didn't finish red. We finished, I suppose we did finish red. We finished slightly red. But it was, yeah, we had some green throughout the day, which gave some opportunities to sell things like covered calls and whatnot if you weren't already covered. And also, we kind of we closed right around where we need to, which is this line here. Now we did finish just below it, but I mean these lines aren't necessarily perfect to the penny or anything. So, it is a slight estimate when you draw this stuff. So we're close. I think more importantly, it's going to matter how we close the week. And right now you can see we're opening right at that line. So that's kind of how I look at it. The wick is free to go below it, depending on how you draw it, of course. If you're drawing wick to wick or whatever, you just got to be consistent with what you've drawn. So right now I feel fine about what we're looking at for ASTS, but I don't really think this is a story of the day. I think the story of the day is actually gold. Gold is definitely entering correction territory. And if we just look at let's see the monthly. Uh, First off, kind of interesting thing about the gold monthly chart is this is a chart or an indicator that we have called the uranium band. And I usually don't keep it on because it gets a little busy. But it's good to check things out that are sideways trading to see if you're in one of these channels. And the way this is made is the number of times that it crosses this line here. And they tend to be equidistant on both sides. Not always, but often. It's a channel, right? It's essentially auto making a channel. And this channel is surprisingly accurate predictor of where things go once it breaks out of it, either to the upside or the downside. And you can see gold was no exception. In fact, gold on again, this is the monthly chart. We were in this for years. We were in it since 2020 to 2024. And if you got in right when we broke out of here, which I think this is what we talk about a lot, like wait for confirmation. We're not trying to buy here. It'd be great if you did, but you don't know that this is the bottom. Although I'm sure some people looked at it and was like, "Oh yeah, this is a great time to buy." And if you did, congratulations. And then from there, we had this breakout that just went on an absolute tear for years, 2 years, right? This is March of 24, and we had March of 25. And then where did we end up? March of 26, we had our first turn back down after a wild increase of if you got in at the start here, you would have seen 160%. If you got at the end, you would have still seen, upwards of 130% improvement. And this is where I would be looking to consider an exit after such a parabolic run for a commodity of all things. And hey, good morning, Poor Gunner. So, like, when I look at this chart, I'm very much uh, hesitant to get into gold up here. In fact, I went to Costco when we were here in this bar, and it was $4,400 an ounce. Specifically, I remember that because I was like, "There's no way," and Costco had a sign like, "Hey, buy gold, 4,400 an ounce," or maybe it was even 4,600. And I was like, "There's no way I'm buying it after this type of wild run here." We were at that point something like 120% run over the last year or so, and yeah, so I didn't buy any. Obviously, I've actually never bought gold from Costco, or I have no gold, physical gold at all, bullion, whatever you call it. So please don't try to rob me. And this is like not surprising at all that there's a correction going on here. Now, what's interesting is Let's bring up the EMAs here. So, oops, I'm hitting the wrong button again. And you can see that we've crossed the 8 EMA. We're likely going to, at the very least, test this 3800 on the 21 EMA. But like I'm personally thinking that we've got further to drop because for one, we are now bearish on the monthly time frame. We have three purple stars here of the MACD, the iron momentum as we call it, the neon stack, which is three RSI stack, and our gold regime, right? So we've crossed below this carbon structure. It's just very bearish looking to me all of a sudden as we cross below these EMAs and SMAs. So I am interested in watching this from afar. Yes, I'm sure there are people who are shorting gold right now. That's not something that I'm going to do. I don't really, typically, I don't participate in shorting unless I see a really clear, perfect opportunity. But the thing is, we could turn around right around here. So yeah, I'm not sure. I'm not sure it's the best to short at, but it is I think useful to look at these indicators and see that there was good opportunity to predict a lot of this movement. Certainly not the actual magnitude of where we ended up, but again, if you use the uranium band here as an indicator, especially in the monthly time frame, this breakout was just an absolute run that you could have held on for, even if you just held on to the first red, major red monthly candle, you'd still have made 30% ish, right? Somewhere around here. That's pretty good. And if you held on longer than that, congratulations. I mean, it's an impressive run. So I'm currently still bearish on gold. I think there's a high probability that we touch back down into the 3000s here of some level. It could be either of these. It could even be the 50 SMA. I mean, that's wildly low right now. By the time we hit this, it wouldn't be quite this low, right? It would have probably taken a few months and maybe like 3000 by the time we hit it. That's what I see as the quote unquote worst case. Just looking at prior history, right? If you were to look from here to where we dropped to, there was a 40% drop. What does a 40% drop look like for us from the peak here? We'll not do the top of the wick. We'll do the top of the bar that we closed at. Oops. Let's see, somewhere around here. So 40% would take us, yeah, likely to the 50 SMA by the time we got there, and that's a correction that seems wild, but has recently happened. Recently being not really recent, 2011 until 2016, but nothing like extremely notable happened here, and that's why it's kind of interesting. Like there were notable events leading up to this, right? 2007, 2008, housing crisis, housing bubble, mortgage prime lending issues, or subprime mortgage issues with Countrywide, which I had a mortgage through, which is kind of comical. And we could see here, same thing, right? We had a wild run up, and then what happened? We had a drop of about, oh, wow, almost 60% here in this particular instance. So it's not completely out of line to see big 50% corrections on gold. And I think this is something that you should be prepared for if you bought in up here or really anywhere. Just make sure that you're addressing the risk that's in the room and the elephant in the room, as I would call it for gold. Because again, this is clearly a parabolic run. I'm on the log chart, by the way, and to see that type of move is pretty nutso, if you ask me. Same here, right? Like that was a pretty wild man. Be nice if you got in on that, though, right? 660% run in a couple of years. I don't see us. I don't see us doubling up on that right this second, right? I think this is going to be where we take a breather for a little bit. And again, this is just looking at history repeating itself. So another thing I think we should look at is oil. This just kills me. I don't know why this happened. Let's look at the weekly here. And actually, you know what? We can look at the daily because we have this wedge that we drew. And again, there was a smaller uranium band, but it still kind of worked exactly as intended. Where as we broke out of it to the downside, what happened? We broke out to the downside significantly. We're below the 200 SMA on the daily. On the weekly, let's take a look. We're also in a uranium band that if we break out of this, I mean, we probably head back to 50 a barrel. Well, 60, whatever is consistent over here. But we're currently sitting on the 100 SMA. It looks like, yeah, literally sitting on it. within 20 cents today so far. So there's definitely further downside potential here, and it looks like the market has officially decided that the war is over and we're no longer worried about it. Again, how much further does this go? I don't know. I'm not suggesting I know the answer to that, but I would guess around 60, maybe 65, right? Maybe there's a new level, a new channel that we form here. Although, if you look at this, honestly, we're kind of in just like this zone here already. We might just hang around here. This could be totally normal for us to just hang around in. Uh, but on the seasonal charts, kind of interesting. We're going basically back to where we've been. You could argue we're even there right now, based on the way the chart's set up here. So oil is looking favorable for consumers, not so much for people who invested in it. And these are the problems, or really, these are the things that you just got to be aware of when you buy something like oil. There's a lot of pressure from a consumer standpoint to, especially in just the world is affected by oil prices in so many ways that there's always a concerted effort to get that price back below 100 whenever it happens. Now, sometimes it could take an extended period of time, as we saw down here, but generally, we always seem to be returning to this point. And I think there's an argument of it's a finite resource; we're going to run out. But while that's partially true in that it surely has to be a finite resource, there's obviously other forms of electricity or energy that we're approaching that always seems to bring us back, whether it's solar, other green energy sources, or things like potentially nuclear, right? Things like that. That's very popular. Speaking of which, we'll take a quick look at some popular nuclear stocks. Just curious how they're doing. Oklo is one of the big ones that doesn't actually have any revenue at all, but has been sentimentally a very powerful force in the market, and just kind of interesting to see what it's doing here over time. And it looks like it's found kind of a stable channel here. I'm not touching it. I wouldn't. I was interested in it at 20 over here, and unfortunately for me, I didn't full boat into it, but would have been good. It would have been good. Now let's take a look at the indices, where SPY yesterday was very much red, and we're opening up slightly green at this exact moment, 0.34%. And we're hanging around all-time highs. We're currently sitting on the 8 EMA. So this was a perfectly normal back test. And you'll see it's pretty regular that we back test, 100 SMA. This was a big deal. This was the tariff mania. But then even over here, testing the 50 SMA. And right now, it wouldn't be out of line to test the 21 or the 34, right? These EMAs are common points that we go back and back test before we continue on to move to higher highs. Higher lows, higher highs. And that's what we're making right here, right? Like this was higher high, higher low, higher high, higher low, higher high. What are we going to see here? Now, I guess this was a lower low if we look back here. So we'll ignore the tariff one, but otherwise, on a macro, higher high, higher low, et cetera, off we go. And in the channel that we've been in, this mega channel for, if we look at this one for basically forever, this goes back to 2009, you could see that we're still in it. Again, we're on the log view here, which gives you the best view of these relative bar size, not looking at absolute, which kind of ruins everything when you look at absolute. But we're still within the channel. Now, we're getting close to the top of it. If we were to touch here, which is about 800, that's where I'd be looking to get a little bit risk off in my portfolio. I think it's a good indicator of typically when we can ride the top of the channel for a bit. But as we touch it, we tend to reject off of it. Now, outside of Tariff Mania's wick over here, this is COVID. I'm sorry, this is the COVID wick. This was the Tariff Mania wick. Outside of the COVID wick, we've stayed within this channel exclusively. So it is a good indicator and a good just like overall feel for how the market's doing. Now, and I would just be careful as we reject off here. Now you can see in this case back here where we actually rejected it, and then we kept doing some higher highs, higher lows for a bit. So it was essentially like a triple top here across these 3 months, and then we did obviously reject bigly from 450 to 330. I bet you'd love to have gotten full ported in at 330 though, huh? And here we go. So I think we have room to run. I think there's a high probability. There's no guarantee, right? You can see here we rode the channel without touching the top, and then eventually a major issue happened, but without any current beyond the current major issues of the Iran war, most notably maybe the AI bubble being one. I would say that there's no reason why we wouldn't continue to just kind of ride the channel for now. So yeah, I think 800 is well within the sights for the year. I doubt we'll go above 800 within the year, or 850, right? I should say. I doubt we'll touch 900. It takes if we were to go to January, we would if we followed the line exactly, we would still not hit 900, and I would be frankly surprised if we broke through this channel now, with how toppy things do feel, and there's been a lot of hesitancy and volatility as we're near the top of this channel. So there's just things to keep in mind. Now, if you're curious what the bottom side of the channel is, well, it's basically the 50 SMA on the monthly, which is 510. It's going to be just below that, right? 500. I don't see us going that far. Certainly, it wouldn't happen. By the time we got there, it would be already up into the, I don't know, 540 range or so. That would still be a wild pandemic level correction that we would need to happen for us to hit that. You can see otherwise we kind of stay on the top half of the channel. In fact, like if we move this line up to say here, you could see that we're very tight in that. Oh, let me. You can see my nerd group. That's awesome. Let's close that. But yeah, this is very much safe territory from what I would consider, and I wouldn't think we would check below 650 at like an extreme level right now. Again, unless there was a pandemic level world event, that then certainly that could throw us off. Now, if we look at QQQ, you can see we had a very red day on QQQ as well, but it recovered halfway through the day to half of the drop. But let's get back on the daily here, because the monthly, it's like, oh yeah, still all-time highs. We're back testing. We back tested 34 EMA on the daily, and that's totally normal. So again, after a pretty wild run from here of, what do we want to say, 35% for an index, that's pretty significant. And just dropping down to back test here a couple of times seems totally reasonable. Now, we might be seeing a double top here. You can see that's a double top. If we hit this again and reject, I'd say look out below. Honestly, there's definitely some risk there if that happens. Where this is for whatever reason, 745, a very strong resistance point for us. But my guess is we'll go back up and touch this at least one more time, and then we'll get some sort of confirmation of where we're headed from there. If we drop from there, I would be mildly concerned that we've got some real correction potential to a lower an SMA here, whether it's the 50 or even the 100, which seems wild, I know, but like still, in the grand scheme of things, the 100 is above prior double top resistance that we saw here. All right, so this is what I'm talking about, right? We hit one, we hit two, and then we broke through. Here, these are way closer together, so this is definitely feeling like a short-term consolidation and trying to figure out the path forward here. But I'd be surprised if we had a strong rejection all the way to the 100, but it's definitely possible. In fact, by the time we got there, it could even be a 200 test with how close they are to each other. And if we look at, let's see, Bitcoin, we are still on the struggle bus here. And I think it's important looking at the monthly chart here, where currently we're below this critical trend line that we've been above. And we've got a double bottom that happened here, which is, I think, hopefully bullish if we can get strong support here. But if we look at the monthly, right, we really need this month to finish above. And this is scary because we're in one of those uranium bands we were just talking about. We really need this to finish above this line here. And there's only a week left. That's not a whole lot of time, right? So exactly 7 days, including today, to get out of this. 6 days, I'm sorry, I can't do math. To get out of this. And, I don't know. I don't know what's going to happen here. We did test on the 50 SMA on the monthly. which is pretty intense, right? The low is 59,100. That's below the 50 slightly. So I'm hopeful that this is where we find strong support. Typically, you can see that this is where we've bounced off in the past, but we've wicked below it. And yeah, we definitely, if you're heavy into crypto, look out below. We could definitely backtest off the 100 here if that doesn't go our way. And I would hate to see that because this is otherwise this has been a nice channel for us to be in. If we if we do go all the way back to the top of the channel, it gets insane. I don't know if that'll happen, but yeah, that's what we're hoping for as we're watching this, of course. After that, the only other thing that I think is worth looking at here, pre-market in the morning, specific to the indices, is of course IWM, the Russell 2000 Index Fund, and same deal, higher highs on the monthly. This looks fantastic, super bullish. Small caps have been doing pretty well recently, and I don't see anything that like makes me worry at all. We continually backtest the 8 EMA, which is super normal, and in fact, you want to see that. Otherwise, things are getting too disconnected, and at some point, you're going to have to backtest. Now, there are definitely some air pockets here that we are going to have to watch out for. I do feel like at some point we risk backfilling all the way down here with the size of that gap on an index. You never really want to see air pockets this large on an index. When that'll happen, oof, I don't know. We are definitely fully bullish right now. We've got a beautiful stack of the EMAs and SMAs. We've got good carbon structure. Gold regime is quad star on all time frames. Basically, we don't really care about the hourly too much, but yeah, you can see it's just blue stars everywhere, and that is a blue star after the purple, in case you're wondering. So every single chart, including the 2 week, which is not surprising since the monthly and the weekly show it, we're fully bullish still. And until we get a purple, I'm not personally panicking or worried about any of this. So we could even look at the fibs real quick. We'll have to reverse that, of course, because it is reversed. So we'll unreverse it. There's good probability that we test here at 307, 308, whatever this is, 308.55 at the top of the fib level. And then this seems like a likely back test location, place where we might reject to some resistance here. This is a very common fib for strong resistance, the 618 being the golden fib level. But we could blow through it and go all the way to the 2618. That'd be a wild run, though. We're at 295. That would take us to almost 400 here. So I'm not sure that'll happen, but we'll see. We'll see. We're getting pretty close to this fib. We'll want to keep an eye on that for sure. And that's pretty much about it for the indices. VIX being one more thing worth checking, and one that I like to always check out as well is the Fear and Greed Index. So we'll put that on real quick. And currently, you can see we're headed to greedy. So that's a good thing. Or I'm sorry, wait a second. Fear and Greed. Let's see. I think green is greed, right? And red would be fear. Maybe I've got it backwards. Anyway, we're right in the middle. It's totally fine. It's nothing really alarming about that. Maybe this is fear. You would want to buy in fear, right? Yeah, so that makes sense. But Iran war would be I'll have to double check this. I'll have to look. Maybe I'll just look on the website here real quick and bring that up. And let's see. Fear and Greed meter.com. Yeah, we're in fear. We're in fear. Here we go. Bottom side would be fear, and then greed is where you want to be worried about things. So it is interesting to see that while we're at Brahawi and fear. Yeah, I agree. It feels like we're not when you look at the indices, right? But there's definitely a lot of trepidation out there, and we've got big movements coming up with Micron, which is the next thing that we should look at. So nothing really useful to look at VIX, in my opinion, right now. It's kind of just doing its thing. So let's go on to the news of the day, which is going to be MU. The one thing that's going to really matter right now as we get into the rest of the week is going to be earnings on this stock right here, where if we look at, we're on the monthly here, and you can see that we've we've blown through this channel. This is a monthly channel, so this is pretty wild territory. However, we have earnings today. Is it tonight or tomorrow? Yeah, it's today. Tonight. So big stuff going on here. We gapped down pretty harshly yesterday from a high down 13-14%, I'd say, it looks like. And we're opening right here in the middle. My guess is we'll just fill the gap, and then who knows where we'll end up as we go to close. It'll probably be a doji candle. That's the candle that looks like this, like just a decision candle where we don't know where we open and close at the same exact spot, because there's just so much volatility here. This is a wild one. This is definitely, if I would ever say there was an earnings gamble for you to go after, this is on par with Nvidia right now with earnings plays. So going to be very wild in movement, and I'm not personally touching it. What I'm interested in is the actual earnings results. They've got obviously guidance that I wouldn't worry too much about hitting this so much as, I mean, certainly if they miss, that's going to be a huge deal, but especially if they miss badly. But the bigger thing is going to be guidance around demand and continued orders. And if you're in this or what's the ETF DRAM, right? These are going to be heavily impacted by what's going on here with MU, and I would just be very cautious. I think this is a good one to kind of sit on the sidelines and then see where the trend is going to continue from, and then you can consider, do you want to take a position here or not. For me, I don't currently want to get in at this what feels like an extreme top for MU, but if their guidance continues to be strong, there's nothing wrong with starting to DCA into a position here. I think that's totally fine. The DCs also had some big movement yesterday. Nebius obviously had a pretty big drop all the way down to 250. That's pretty wild in a day from 300. So this is where you need to consider, is this like, I mean, it's going to be the same thing. It's going to be affected by the upcoming MU earnings and stuff. So we're still in this handle, by the way, for CoreWeave. So I'm curious how much longer we've got on this before we bang out of it. I am currently just, as you can see, repeatedly selling calls and puts on CoreWeave, and I feel pretty good about the valuation here for CoreWeave. We're sitting on top of the 200 SMA. It feels fine. Feels totally fine to me, and I'm looking to continue to do the same until we eventually have what I hope is a breakout to the top here. You don't know why you skip DRAM at the lows. Yeah, I mean, but that's the thing, right? Like nobody knows when an ETF opens. We don't know this is a low. This could have gone the other direction. There's plenty of ETFs that, I mean, it's sector based, right? So now I like the idea of DRAM, and I also like the idea of another one, NASA, where this feels like a great time to be looking at space stocks that are depressed, right? And obviously with SpaceX tanking post IPO, which is only 1.5% of this ETF, by the way. It's got a lot of Rocket Lab, ASTS, Lunar, etc. So like this is if you're interested in getting into something, this is when you might consider it. But this is like if we cut off this whole section here of what went down 30% or so. I clicked too high, but yeah, call it 30%. Doesn't this left side look like the DRAM chart right now? Right. So, we might see the same thing happen where we go down 30% and then you've got a great opportunity to get in. But there's just too much reliant on what's going on with MU right now for me to have interest in getting in here. But if you wanted, you could certainly take a 10% position in it of like it's of 100% that you would put into the stock, not a 10% of your portfolio, 100% of the position you would consider for this stock, for this ETF, you could put in here in case there's a run up and you could take advantage as you DCA in. I think that's an important thing we've been talking a lot about, is making sure that there's a glide path in or out in case this does go the way of what we just saw with NASA. And NASA, I felt bad missing it when it was up here. I was like, I guess I should have got in. But look, patience pays off. as it always does, especially in the space industry. Space stocks are just so wildly volatile. You got things like ASTS that looks very similar to the NASA chart, doesn't it? Lunar. Look at the lunar chart. Oh my goodness, we're hanging on by a thread. In fact, we've lost the key support level here. That was the top of the cup. And where's the lunar go from here? I mean, if we break down from here, 200 SMA seems like almost a guarantee at that point, doesn't it? We have others like, ONS could fit in that bucket. I don't, ONS isn't space, but it seems to be connected to it when I look at it and how it moves. Same with Archer. And there's Rocket Lab, right? Rocket Lab, look at that drop. We're still within this pretty mega channel for Rocket Lab, and it feels fine. You can see I've got an alert here for wake me up if it hits the 100 SMA, because then I'm kind of interested in getting back in within the channel, but at the bottom of it potentially. That seems great to me. So I may take a position in Rocket Lab here, or not. I might honestly, you know what I might do? Rocket Lab is like 10% of NASA. Maybe I'll just keep buying in NASA at that point. So this is definitely a clearly a sector wide trend. And when you see sector wide trends, to me that's where it's just the best opportunity to consider a sector wide ETF. Now, I'm not going to be able to comment on things like the cost of the ETF. Some of these may have big fees or whatever, but you have to do your own due diligence on those if that's something you're willing to bear the cost of. But with the exposure being wide, you can still benefit from big spikes from big holdings that they have. And if we look at the NASA holdings, we can take a look at what the top 10 are. Here's the more about the fund, and you can see that they've got Echo, which I didn't even realize was their biggest position, but look at that. They're up 1,200%, 1,100% here. Got Rocket Lab is almost 10%. ASTS is 5%. Lunar is 5%. Let's see. Fly is up there 4%. And if you want to find RDWs in there, I just saw somewhere Black Sky, right? Like a lot of these LightPath, very popular stocks. And there's SpaceX down at 1%. So even though SpaceX has had a rough week once we got past the IPO, I drew this yesterday just to show, like, hey, we're at IPO price, currently 153, and I still have no interest in touching this, but I have exposure to it now with NASA, and that's all I need. That's all I need. I had a friend ask me, like, hey, at 200 should I get in? I'm like, you're out of your mind if you get in right now and assume that that is a good price to buy in at. We just don't have any information. We have a $2 trillion market cap. What did we hit? At one point, we hit 3.2 or something. That must have been right. And it doesn't make money. It doesn't make money yet. So, like, how about no? How about we just wait and see if this is a viable stock? And it's probably going to go the way that most IPOs go. And I like to look at Figma as one of those. Like, look how in the dumps this is, under $20 here. And what do we see? Where did we open at? I remember we opened in the 80s, right? Yeah, 80s, and we hit 150 almost. What did we hit? I guess 142. Man, somebody bought here. Somebody bought here, right? I don't know who. Hopefully they're not still holding it, because we are down from the highs, and we'll just pick somewhere in the middle here. We're down almost 90% at one point, right? 85%. That's wild. Now, I don't foresee SpaceX doing that, but I've seen people do some analysis on, what they've got going, and they've suggested that maybe $60 is where they should end up. And that's already, let's say, what, 80% drop from the high? How do we've got to find 60 here, somewhere over here? That is a 75% drop from the highs. Yeah, I mean, there's so much downside potential. And really, what is the upside potential? Do we really think that SpaceX is going to be valued more than Nvidia? I mean, Nvidia, let's look at Nvidia real quick, which is currently at $200 a share. Man, that is such a beautiful price to get in at potentially. I'm not going to do it though. I'm going to wait. In case we test one of these. But yeah, look, market cap is 4.85 trillion. So but more importantly than that, they make money, and a lot of it, right? So They're making net income $120 billion, and SpaceX is losing $5 billion. Like just the absolute value. If you just said SpaceX was losing zero and just making zero, it's essentially the same percentage difference. That's wild. That's how many billions more a company that is valued at uh, double the market cap, or I guess 2.5 times. No, not quite. 2.3 times, something like that. That is insanity to consider that stock price is appropriate for SpaceX. So I personally just will not touch it, not for quite some time. So that's my thought process on SpaceX here. So we have some exposure and we get the meme upside, but very little impact on the downside. Very little impact on the upside too, for that matter. At 1.16% or whatever it was, 1.6% holding. Hey, Dynabro, welcome, welcome. But yeah, that's kind of where my head's at on the broad market today. I think that's the most in depth I've gone in a while on where we're at from a macro standpoint. NEM is another one that I'm keeping an eye on. This is a very much tied to gold and precious metals. I haven't picked the target here yet for where I'm interested in getting in at. Really, like I don't even care about the stars on NEM. I care about the stars on gold for this one. And oh, look at that. We are below 4,000. Ooh, it has happened. We have dropped below 4,000 and still not a point of interest for me. We got to look at longer time frames to even have a consideration for where we might be getting in. And 3,800 is like the minimum I would think we have to correct to. But very bearish. And because of that, I'm bearish on NEM. And this is the proxy for precious metals that I'll likely eventually gain some exposure to. I just don't like it right now. I think it's very worrisome. Did I get off log? No, for some reason I put this in on a non-log chart. What is wrong with me? But yeah, we're in correction territory here. Actually, we've definitely broken the upward trend of where we were, and like no matter how you draw it, right? So I think we've just got to be really hesitant on me personally having that exposure. Now, as a company, I have zero concern for them. They're so cash rich. They've got, I think, 5 billion in cash, just kind of sitting there that they don't even know what to do with. That's a pretty solid cash position, and we'll just have to give them some time to breathe, see what happens here. On the green side, it looks like a lot of the stuff that dropped significantly is seeing some rebound. Ampix is going to be another one of interest for a lot of people. Where I've got a line here of kind of this head and shoulders. It's not really a head and shoulders because the right shoulder's too big, but we do have this like triple bottom here, right? And if we break through, it's kind of scary. But we're within a bigger channel, a broader channel, so it doesn't mean a whole lot. This is just musings of a TA for me, and I'm actually more interested in, do we hold the 200 or not? Historically, it's held the 200 really forever, since all the way back in 2024. So this would be a big deal if we broke down below this. And if we break down below that, I might have to exit the position that I have at a loss at the bottom of this channel. That'll be the last point of concern for me, where if we break down below there, we're in mega correction territory. So yeah, this will be an important couple of days here for Ampex. Really, it's going to be how we close the week, I think, is going to be what matters the most. And you can see we wick below in the week, but as long as we close above that, I'll personally feel fine. And we're opening right at the support. Very interesting. Very interesting. So yeah, keeping an eye on that for sure. It does look slightly more like a head and shoulders on the weekly chart now that I'm looking at it. But we'll see, right? I think this is going to be an interesting point of, do we hold or not? But honestly, at least my position's not that big. I'm not super concerned about it, and the premiums are good. So like my cost basis, I got in at 17 again. I think I'm down to under 16 already, and we'll keep covering here for a little while until we run out of space in the channel at the very least. Oust is another one that's just kind of wild swings. But on the weekly, like check out the weekly. We're in this cup and handle, and I've officially entered a sizable position. I took a 200 share swing trade down here and already got out at 50. And then I decided, you know what? I'd like to get in at I got a 45p, which is at the money, and it's protected down to about 42.75, somewhere over here, right in the middle. But like the weekly chart looks good to me. I don't see, I know on the daily, this is the problem with looking at stocks on the daily. This movement seems kind of scary, but from 42 to 50 is a pretty big percent travel in both directions for the day. But I'm not really concerned by it when I look on the larger time frame. Because of that, I'm kind of interested in just taking a bigger position here, and it's I went about 4% on it with a target of this 75. That would be my exit point for sure. And we'll see. We'll see what happens. Not financial advice. Do your own due diligence. This is high beta, high risk for sure. But I'm happy with the covered, the cash secured put here to possibly get in and see where we end up. Another popular one that a lot of people are probably paying attention to is ONS, where we're in this just sideways channel. Curious if there's a uranium band going on here. Yeah, for sure. On the weekly, we've got a uranium band. We just tested off the 50 SMA on the weekly. Historically, we're seeing strong support here. Will we today? Will we this time? I don't know. I don't know, but the business seems strong fundamentally. So, I don't feel too concerned about it. There are some big net income hits with all of the acquisitions they're doing. But look at this: the technical strong sell, analyst rating strong buy. I agree. I agree with what the analysts are saying here. And if anything, they were just getting some buying opportunities. I think we're shaking out some paper hands, and I'm happy to be in it right now. I think we've got a real good trajectory of making money, and we have made some money, which is cool. We missed. Well, we didn't miss. We were negative, negative, very negative. This was acquisition tied to acquisitions, and then big positive here in May. And I think this is the trend line, this trajectory that we're going to expect for the longer term with ONS. So we'll see. We'll see. And then we've got stocks like Lilly Healthcare, which is also still in this mega channel. Kind of interesting that we broke out, but we broke out with the red candle right back into ourselves. So this uranium band is not really valid right now. But yeah, we're sticking to this channel that we've been in for quite some time. I'm interested to see if we touch back down here, I will likely get a position going again with maybe this time actually the regular stock instead of Lily X. But it's been on a pretty solid tear here for forever. Again, we're on the weekly chart here, so this goes back to COVID time frame. And yeah, I don't see them slowing down. I would expect continued high adoption of a lot of their drugs, and because they're a manufacturer, I think it's a really nice play. So we've done well with some swing trades here. I hope to continue to do well with them for Lily. But I think actually that might be about it for today. I guess we could look at Iron real quick, see what they're doing. We had cup and handle potential for them. Let's check out the daily, and we kind of broke down here. So I don't think the cup and handle is happening any longer unless it's some really weird looking handle, which I guess is possible. You see, we're in a bit of a uranium band here. It doesn't really look accurate though to me, so I'm going to turn that one off. But I also at the same point, it feels like CoreWeave a little bit. So let's delete some of this that is no longer, in my opinion, happening unless we have a bigger cup. And that is definitely something that could be the case. And if we have a bigger cup, oh my goodness, look out. But yeah, check this out, right? If we went from say here to, I don't know, maybe around here, maybe around here. Hard to say. I'm trying to get this to be a nice flat cup. Could be doing something like this, right? And honestly, The volume profile kind of works for the most part here. We really probably want to look at this on the weekly. This could definitely be a thing. This could definitely be a thing. And again, we do kind of have the volume profile going here. So it's not over yet. It's not over yet. Hey Nim, thanks for joining. But yeah, that's kind of what I'm looking at for the day. We've got pretty mixed opening right now. Again, the biggest drop looking to be NEM. Palantir. Oh, we will look at Palantir. This was a support that I was hoping we would actually hold. We are on the weekly, by the way. So we might still actually. The week's not over. But this line here, this is the ultimate support line, is 111. I think we might hit 111. This will be a TA test for the ages, if you ask me. If we hit 111 and support, I think up we go. I really do. Not financial advice, all that, but I will probably take a small position there. If not, it's correction territory, right? And we will then be looking out all the way down to 60s. Probably 70 by the time we got there. 75, maybe something like this for Palantir. So a little scary, but this is opportunity, right? This is what we want to see in getting into a trade. Now, ideally, you have patience and you wait for confirmation because touching 111 doesn't mean anything if we drop below it. That would be just straight up fallen knife, right? So be careful there. But if we look on the weekly, I mean, we are bearish on every time frame, including hourly for Palantir. It doesn't look good. But we could turn around pretty quickly here if this is to actually come to fruition. And the daily's telling the story right now of we're highly likely to touch this. This is only from where we're at right now. This is 2.5% down. So I would bet money we touch it, but I would not bet money we necessarily just immediately bounce off of it. It's so bearish right now, and that is concerning, for sure, for sure. So be careful here, but I think we keep an eye on it. If this pans out to be a bounce, it's going to be a nice play for sure. So this is what we're watching for right now on Palantir. All right. Well, with that, I'm going to wrap up for today. We went pretty strong for 45 minutes, getting ready for pre-market. I think it's fine to get some limit orders set. I'll probably set some for covering a couple of items. Not really sure. I think, for today, definitely this is all, again, trepidation, I would call it. A lot of movement here on a lot of different equities that are bouncing back and forth. Pattern, some of these low volume stocks, we were up 2.5%, and then we were down 1%, and you just can't make decisions on pre-market, but you can just get a feel for, if this happens, I want to do that somewhat objectively before the price starts moving, hopefully more favorably in our favor. And with that, I'm going to wrap up. Thanks for stopping in. I'll see you guys in the Discord.